Hi everyone, my name is piterpakulski. Today we'll continue creation financial model of a subscription. And today we'll be talking about marketing expenses, because already we have customers, we have the revenues, and now it's time for us to talk about the cost of acquisition of that amount of customers that we're going to work with. So to cook this dish, we need first of all the list of marketing sources, like for example the marketplaces where our customers come from, like for example YouTube, Instagram, Google AdWords, and so on. So different marketplaces, source of customers. Each business has its own list of such marketplaces. We need the list. We need the amount of new customers that come to us each month, and having all these in complex, we're able to calculate the marketing expenses. So what I will do, I will create a timeline for marketing. So I will need for that I will need operating activity, the current month number of operating activity, because the structure of new customers can be different. For the first 5 months we can have the one structure of customers. On the 6th month of operation activity, the structure can change. After a year of operation activity, the structure can change again, and so on. So we need the line when where we're counting the operating activity months. So here we start in March, and then second month, third month of operating activity. Then we need the total amount of new customers. I will just create the total from that we already create. So amount of new customers. And now we have to name the marketing let's just say sources of customers. Sources of customers. So source 1, let us have, for example, 10 sources of customers. So they are the inputs, so we color them with blue because all our inputs are colored with blue. And now we have to create the structure of the customers inside timeline, because the structure can change during the timeline of our business. So create the timeline. Month of operating activity. So this will be the first month, then this will be the second, So in our project we have 10-year horizon, so we have 120 months of operating activity. So here will be the end of this table. Now we are going to create the structure for all our for the customers from different sources. So here we will place our sources. So here we will have percentage format, 8, 9 and 10. So here we'll have percentage format. Then here we will have the inputs. For example, at the first month of the operating activity, we have 5% of customers from source number 1, 3% from source number 2, 15% from source number 3, and so on. So we'll just create the structure. Here we'll create the total. So 4, for example, 15, 12, 40, 1 and 2, for example. So the total will be 100%. Then we will create some control panel. If this one equals to 1, then we place OK. Otherwise we place mistake. So we will place like this, and we will use conditional format, new rule, new formula. This one equals to 1, delete the $sign, format. If everything's alright, we will use green color. Font will be like this. Okay, so we will have 1, we will have mistake, we'll have 3, we will have mistake, we have 2, everything's alright. So for example, here are the months of operating activity. Then we're extrapolating this formula to all of our 120 months of operating activity of our project. And if the structure will change, let's say during the second year of operating activity, starting from 13th month of operating activity. We can change the structure and see what will be the costs of marketing. So this is the structure. Now we have to put all these values inside timeline, and also we have to add a new parameter, the cost of acquisition of one customer, because at the first month the cost of acquisition of one customer can be more than, for example, after a year of operating activity the cost of acquisition may rise and so on, or decrease. So we have to add a new parameter, the cost of acquisition. So we will use these values. So at first month of operating activity, the cost of acquisition of one customer from source number 1 can be, for example, $2, $3, $5, $6, $1, $7, 4, 12, 8, 3, for example, 5. So these are the inputs. We mark them with this color. So during the operating activity life of our project, so the values of expenses of acquisition this or that customer from this or that source can be different, and we can adjust them. So for example, the first 12 months, during the first 12 months the cost of acquisition may be 1, then at the second year the cost may be 2, at the third year the cost of acquisition can be 3, and so on. So we can adjust these values. So what's next? What is next? Now we have to put all these percentages and numbers, the costs of acquisition, inside the timeline. So let's start with structure of the customer. This will be percentage. So we will take, here will be all our customer types. No, I'm wrong. Here will be sources. Here will be sources of customers. So we have 10 sources of customers. Then we will need to introduce one more line here. Okay, this will be the column number 2 of this table. 2, then plus 1, this will be 3. This will be 3. And I will use VLOOKUP function. If I will search VLOOKUP. So we are searching for this value. We are freezing the line. We're searching this value in this table, in this table, and we need for the first source we need the column number 2. We need the column number 2. We need the column number 2, and we need exact match. Then if error, then we put here 0. So we have to fix, by the way, we forgot to fix this table. So here we have the percentage. Then we move to the second customer. For the second customer we take column number 3. So B, C, I'll just extrapolate. B, C, B, C, then D, D, E, F, E, F, G, G, H, I, J, K. So let's go and check. Then it is here, the last source, number 10. Now we'll just extrapolate this story to the right. So this is the structure of our new customers, and this structure can be changed during the timeline of our project. So here are the months, here how we can change the structure. Then what we do, then we have to create the table for cost of acquisition. Cost of new customer, let's say it a little bit easier to save a little bit time. So here will be the sources. We will use also VLOOKUP function. We can take the same table, but we need a new column number. So this will be n, and we will get this value. So this won't be percentage. Format cells, this will be the number. N, we will extrapolate this. N, O P Q R S T U V and W. UVW, let's go and check. Here it is. And now we will do the same exercise for the cost of acquisition of one customer for each marketplace. So this is also a dynamic parameter. If the cost of acquisition will change after 1 year or 2 years, we can also adjust it easily. So here we have the total amount of customers, and now it's time to allocate them inside our sources that we already created. So we just go here, create a new table, customers by sources, then we take the total amount of new customer per month, then we multiply it, we fix the line, then we multiply it by this cell. This is the structure. These are the customers, types of sources which they come from, and then it's time for us to calculate the marketing expenses. Marketing expenses. Let's take a different color, standard, like this, for example. We will add a few coefficients for to make us play with data when we'll create the cash flow statement, when we will get the simple discounted payback period, when we will get the cash flow statement. We will definitely want to play with scenarios. What will happen if the marketing expenses from this or that source will go up or go down? What will be if generally all the marketing expenses will go up or go down? And for that purpose we will create the coefficients. So this is source, this will be coefficient. The basic value of coefficient will be 100%. This means 1. This is the input. This is the input. General marketing coefficient to all expenses. So for example, if we want to increase or decrease all expenses, we can use this coefficient, but if we want to increase or decrease some particular coefficient, some particular expenses from this or that source, we can use this coefficient. So so now we go down, marketing expenses, okay. So what we will do, so we have customers, amount of customers, multiplied by cost of new customer, then we multiply on this coefficient. Don't forget to freeze the column and multiply it on this coefficient. Here we freeze line and column to make us easily play with data. So these are our marketing expenses. We mark it with red. For example, if we want to increase the expenses on source number 10 from 20, we just can do it like this. If we want to increase it 3 times, we can do it like this. If we want, for example, to increase, for example, all expenses, for example, 5 times, we can just do like this, and all our expenses, marketing expenses, are 5 times bigger than we had before. So it is very important for scenario analysis when we will have it happen 5-7 steps ahead. So when we will look at simple discounted payback period, we will want to play with all these coefficients. What will happen if the project will go this way or that way. So this was the story about marketing expenses. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order financial model from scratch for your unique business idea. We can help you with that. So see you next videos, guys. Thank you and bye.